Welcome to the 10th anniversary of REIMAGINE 2021. Presented by Mousebelt. Coming up next.
All right, so welcome back to REIMAGINE. Here we are, well over the halfway mark in 2021. What a year it's been. I got to say, in the crypto space, it's kind of amazing the sort of hypes, the bubble burstings, the bears, the bulls, everything that's taking place right now feels like it's such a pivot point. And I think that's true across so much of global markets, whether it be coming out of, the sort of COVID, era or re-entering it potentially. I mean, we're going to see how, conferences like this age and fare in the near future when there's so much uncertainty, so much confusion. Inflation is suddenly a big word on everybody's lips, greater salience than there has been for a long time. And so, talking about that space, I think it's so critical to look at some of the projects that have come out over the last couple of years and to take a look at where some of those hype markets really are now that I think we're in much more of a developmental stage, much off that hype train and really into the groundwork where people putting in the good yards, and those projects that have the staying power are going to be the ones that stay around. So without further ado, I'd like to welcome Sebastian Quinn Watson, co-founder of Yieldly Finance. Sebastian, firstly, thanks so much for being with us.
Pleasure, Ash. Thanks for having us.
All right, so let's start off simple. For our audience members who are unfamiliar with Yieldly and what you guys are doing, give us the overview, give us the sort of the pitch of what Yieldly's up to.
Yeah, very happy to, delighted to be here. So Yieldly is the first suite of DeFi products built on Algorand. Algorand being one of the sort of major protocols and now been around for just over 2 years. Our mission is to empower the sort of next 1 million users to exchange digital value. We want that to be without friction, gas inefficiency, or also sort of the security risk, which, all three of those have been pain points or problems, currently in DeFi. To date, we're very fortunate to being able to have delivered on some of that mission critical kind of infrastructure for DeFi for Algorand. That looks like our staking contracts, allowing people to deposit, withdraw, exchange their digital assets or their ASA assets, the Algorand tokens. We've started to unlock interoperability. So we've deployed and delivered the first ERC to Algorand bridge. So people are now able to get the benefit, or people within the Algorand ecosystem are now able to get the benefit of trading and swapping within Ethereum, the Ethereum ecosystem as well. And then on top of that, the other thing that we've been doing, and we're excited to sort of see launch over the next little while, is allowing for other projects that are built or developers that have been building on Algorand to start distributing those tokens to a growing community of of users in the space. So to date, I guess we're very, very fortunate. We launched just under 2 months. Sort of time goes very quickly. It was just under 2 months ago. We've welcomed over 10,000 users. Those folks have staked, over 30 million, dollars worth of assets, or whether it's Algorand or our native token. We've seen about 230,000 transactions happen. And the last week or so, we've also proactively increased the user base, or the addressable user base, through some sort of industry first partnerships with esports teams as well. So it's a start. I think anyone who's been looking at crypto or looking at the market, the ecosystem over the last 18 months has really seen the power of DeFi, and we're really hoping to bring that and have taken great steps to bring that power of DeFi over to the Algorand ecosystem.
Yeah, and it's such an important point you touch on there about, firstly, the power of DeFi, the growth in the industry. But I suppose, we're looking at this moment in history and in where we are right now, and there does seem to be, a stalling, whether it be of markets, of interests, of hype. I don't know what it is, and some have spun it quite negatively. And, there are those that will say, this is it. We're in the bear market. There's going to only be pullback. All those institutions that were set to come on board are going to jump ship, just like they did in sort of 2017, 18, when there was starting to be some interest there and they all ran away and delayed. As someone, so integrally, sort of involved in what's going on, within the DeFi space, do you reflect those notions? Do you think there is that big pullback, or are you still seeing interest, whether it be retail, institutional, governmental, whatever, taking place in the DeFi space?
Yeah, I think the short answer is that there is, we don't share that view. We see that there's, fundamental momentum behind the crypto or the blockchain technology, being whether it's through adoption, whether it's through people building, whether it's through the increase in user numbers. And so I think it's quite different from perhaps some of the earlier pullbacks that the market has seen. I think if you reflect back into 2017, and 2018, that that there was a very sharp dip in the market, and I think what people looking at the headline prices, what is kind of often overlooked, and I think is being hugely overlooked at the moment, is just the sheer number of users piling into products, and the number of people that are building things that are actually here to last. So we see a lot more infrastructure being built. We see a lot more things like custody, a lot more wallets. We see a lot more of the regulatory approved products sort of permeating to different markets. And so, and then we know that there is, significant, institutional momentum behind these, the market at the moment. It's a curious world where you get worried about a dip when the price of crypto is sort of, up 30 or 40 times, sometimes, 100 times from where it was 12 to 16 or 18 months ago. So, we're genuinely excited about, the momentum. We see a lot of user growth. We see a lot of, transaction volumes are there. I think the critical thing is and the other thing that's different, I guess, from the market beforehand is just the number of, investors out there. There's huge amounts of capital flowing around in the, economy today. You touched on it, inflation is a big issue, but that's, has a healthy, input into our industry, and that there's, a lot more funds with a lot more institutional money with a lot more interest in crypto. So generally pretty, exceedingly bullish on the space, and we look around our ecosystem and we don't see anyone stopping building. We don't see any of the major funds in our space stopping, investing. So, only kind of very, very excited for what the future holds.
But I suppose I wonder in that, you say that there's more sort of money floating around the markets, and, when you have inflationary risks, it's because there's more capital around, and people are looking for returns on that capital and to get yield on their capital, something you guys are there for. And so, you've got products like your Yieldly Algo staking pool, which offers some pretty impressive yields. What's the figure there again that you guys are offering?
Oh, I think at last May this morning it's sort of 60 or 70%. It fluctuates with the prevailing market, but
for sure,
still a lot healthy. Still a lot healthier than I think putting it in the bank or doing other things.
Right, exactly. So when you're talking, often less than 1% at a bank, or depending what numbers, 1 to 5% at a bank, and inflation's outpacing those numbers, it seems to make more sense to get into the crypto space, particularly if you've got some extra liquidity to put out there. But I suppose I wonder, and this is something about DeFi that I think, a lot of people think about and comes up time and again. When you've got those, those yields that you're talking, 60, 70, 100% returns, is that sustainable into the long term? Is that, sort of where the industry is headed in the long term with those big, eye-catching figures, or is this sort of a nascent industry still growing, developing, and trying to pull people in?
Yeah, that's a really good question. I think, there's definitely momentum there. I think we can't speak to the high figures that are being put out elsewhere. We've designed our system to provide a really clear risk reward ratio. We love people to be able to use Algorand and use Yieldly within our ecosystem, and think that there is just a great amount of growth that's possible there. I think if you cast your eye across, other parts of the market, whether it's looking at, some of those high growth numbers you've seen in Binance, on some, in Ethereum and Binance products, I don't think there is, that can be sustainable. I think if you look behind those sort of, triple digit returns, you can start to see that, you're relying upon, technology that's not quite there. You're relying upon, people are essentially doing what some pundits are accusing, central banks of doing. They're just printing digital dollars or printing crypto and hoping that at some point, some fundamental thing within those ecosystems picks up and allows it to exist. That's differentiated with what we're doing and what a number of other players, within the Algorand ecosystem, which we're much more familiar with, are doing, which is, building critical infrastructure has a really clear, use case for why that token exists. Having a really clear relationship between the use of that token, the rewards, the future implications for, the infrastructure that's being built. So people that are using our token, allowing them, to bridge into other ecosystems, they're underpinning, underpinning that technology, they're really helping us, exist. So there's, you can sort of differentiate that from some of those other participants in the space. And what that allows, us to say is that, that type of model is sustainable, right? That you can expect to see, where there's a clear use case and real infrastructure in place, why that token economy exists. I think there's some great stats out there at the moment, something along the lines of, I think, the one of the latest reports was, over 30% of the crypto hedge funds currently have started, deploying capital onto decentralized exchanges. And essentially doing liquidity farming on those exchanges, which again is a really, really clear use case. You see the relationship between the volumes going up on those exchanges, and the value and the return to those crypto hedge funds. And so, that's a really, clear example of, what we would call a sustainable kind of DeFi model, and I think the market is, happily experimenting with, with all of those types of models, and and the winners, like we saw in 2017 and 2018 when the kind of ICO boom kind of burst. There is still a number of great companies that arrived out of that or grew out of that and are still here today. And I think the same, can be said for, DeFi companies now. A pullback in the market is never a bad thing if you're confident in the tech you've built. And, we know that plenty of participants out there are exceedingly confident, and the investors similarly so.
Yeah, no, absolutely. And I think you touch on a very good point there that, we've seen this wave occur, obviously in a less mature fashion, I would say perhaps, but, with the ICO booms of 2017, 18, and now we seem to be seeing that in DeFi where you're having products flood the market, come on in, and those sustainable ones will survive. And I think that segues nicely to my next point, which is, over at Yieldly, one of the big elements you have is your association relationship building with the Algorand ecosystem and on the Algorand protocol. You have interoperable bridges between Ethereum and Algorand, but fundamentally the Algorand space is where you guys seem to be most comfortable and most native. Now, this may seem a basic question. I'm sure you get asked this all the time, but still it's one that I think interests a lot of users and a lot of our audience. But why Algorand? Why wouldn't you just stick with Ethereum? Where the vast majority of projects are happening.
Yeah, it's a great question, and it's probably quite a timely one. There was a really wonderful report that was put out by the guys over at Arrington Capital. So the sort of early backers of Ripple. They just put out basically their defense of why Algorand. Why it's the protocol, the premier protocol for building going forward. And it kind of echoes, quite nicely, the reasons we did it. For the benefit of the audience, Algorand solves, at its sort of most elemental point, it solves the blockchain trilemma.
Right.
Basically, it means you can have decentralization, performance, and security. You don't have to make a trade-off between any one of those. So it solves some of those, really clear pain points that you see, in Ethereum, for example, the congestion which happens kind of in those critical times when everyone wants to, buy, trade, or sell. There can be just significant delays in that, and then in addition to that, you have this sort of fluctuating and sometimes from a retail point of view, an extremely exorbitant price point to actually do a transaction. So that sort of those kind of problems, being thought through and solved with the development of Algorand. Designed by a wonderful professor at MIT. I think the Turing Prize winner, which is essentially the Nobel Prize for technology, and so it provides the basis to create better products for users that solve some of those problems I mentioned.
So that, oh, sorry. I'll just jump in with a quick question there, because then it's interesting to me. Obviously, interoperability is such a key part of the modern DeFi space, and I think for many you'll talk to, they say it's the goal of the DeFi space to eventually make interoperability just totally open, and it's going to be as easy as a click of a button to switch between any protocol and use whichever for whatever purpose best suits. I guess I wonder, is that shared by you? Is that the goal, that you see it as ultimately a sort of a sweeping utopia where a rising tide of interoperability will lift all ships? Or do you think there is a case of, by creating this Algorand, ERC, ETH bridge, you're going to sort of, I guess, pull liquidity out of ERC and bring it over more onto the Algorand network? How do you sort of, is it zero sum? Is it integrative? How do you think about this?
Yeah, we think of it sort of user first. What makes it usable for people? What makes the experience, the most straightforward, intuitive, for anyone who wanted to play around in or use use blockchain technology, or use the applications that are powered by it, which is a more interesting point that I'm sure we'll get to. So I think interoperability plays a great role in that. It allows users to decide where they want to operate, what apps and what ecosystems they want to utilize. I think interoperability is, it's not a silver bullet to solving problems that, fundamental problems that exist within, the architecture of protocols, right? You can have an interoperable bridge between, Ethereum and Algorand, but whenever you wish to, if there is a congestion in Ethereum, anyone wishing to use that bridge, is still going to, sit in the same queue that anyone else on Ethereum is going to sit in, to do a transaction. So you don't escape these kind of fundamental problems that exist on certain ecosystems, right? You can't have a bridge that somehow will stop transaction costs existing. Those types of problems are well articulated elsewhere. There's very serious and smart people working on solutions to them across different ecosystems. Algorand's sort of already there though, and so our worldview is that it provides the basis with which the next we call it the next 1 million users from a Yieldly point of view, but I know people out there are contemplating if banks, if governments, if other if it's going to get the proper mass adoption, what is the protocol that you would use to do that now? And I think from our point of view and certainly others, that's Algorand is the primary contender. But as with all things, we're in the business of building products that users like, that they want to use and that solve real world problems for them. And so having a bridge, having the capacity to build these sort of world first bridges to do to loop back onto this interoperable point, is that in a world that another protocol is the thing that becomes the preeminent protocol for users, then it would make we would want to have the technical capacity to be able to bring allow our users to participate there as well. So it's sort of this hedge against the future. in that regard, but a really important one. And at the moment, it serves a really critical piece of infrastructure. It's the first bridge of its kind doing what it does between these two ecosystems, and we'll continue to roll that out across other ecosystems as well. And come back to the, and keep listening to the users and hearing what they want, basically.
Yeah, absolutely. And this is, I think, a good point just to change tax a little bit, because I sort of want to move away a little bit from the technicalities, of solving the blockchain trilemma and sort of the interoperability skills, to thinking more in that sense of, I know you guys, one of your mission statements and one of the things that you're sort of keen to do is bring so many, more users into the marketplace, and mainstream users into the marketplace, both obviously at a retail and, an enterprise and institutional level. Now, I guess I wonder, from your perspective, what do you think of as sort of the key factors, the silver bullets, as it were, if there are indeed any, that bring mainstream users on board? I mean, is it the best technology that's going to win the day? Or is there a degree of comfort, usability, functionality? I mean, what do you see as the primary draw points?
Yeah, I think there's, if you were to simply stratify the market into two types of users, just the everyday person wanting to participate in the space, and then, the hard-nosed investor crowd or the institutional crowd. I think that there is a different set of needs that those users have to attract them into this market. Speaking to the retail side, or the sort of everyday users, I think the best example of products that work, the thing that matters there is kind of creating the iPhone-like experience, for users, like something that is elegant, simple, and the technology isn't at the forefront, right? You want to create products that just make sense, that are intuitive, they do what they say they do, they solve, problems that people have, and we sort of have, we can see that from the users, the user feedback we get. We've, like I said at the top, top of the catch up, we've had sort of 10,000 or so folks start to interact with the product. And the thing that sort of struck us the most, is the feedback we get is that they just want the thing to look good. They want us to update. They want the UX to be, super intuitive. They want the, they love the design. They want to see those types of things sort of bear out. And so, that sort of product piece, or user-focused product piece, kind of, is something that I think has been somewhat overlooked across the wider kind of industry. To date, it's sort of products have been built, from a tech point of view first, and that makes a lot of sense, because solving these tech problems is critical to. There's a kind of critical foundational layer to build, more exciting apps for others. But we're now at this point where the industry's matured, where there is great, there's great resources available. So the tech problem is becoming, is being solved. And so, the differentiating factor now is, how easy it is to attract and retain users. And so you sort of see, great products out there like, the exchanges, Coinbase or Gemini and elsewhere, that have, that you can see in how they're communicating with, their investors and the market around really wanting to build, differentiate from the user point of view. So, we incorporate that. We're intending to build and make the products, simpler and more. More straightforward. We want them to be super intuitive. And you can see this world where the more intuitive and elegant that those solutions are, that is sort of will be a critical kind of competitive edge for any project building in the space.
Absolutely. Oh, wait, I'll just pause for a second there, because it's interesting to me that it's always felt like, and you mentioned Coinbase there, that a centralized exchange and those centralized products that exist out there are always going to have that edge. Whether it be, having help and support lines, whether it be being able to, respond directly to user experience issues over the sort of DeFi space. And that's always been a sticking point for me, looking at DeFi and thinking about, non-crypto users trying to come on board and sort of getting, scared away, stuck, not having that support necessarily, particularly if you're not involved in the sort of crypto community that's there to assure you that this is the right thing that you're doing. And da, da, da. Anyway, that's always been something that's that's concerning?
Yeah, I mean, you can have a decentralized product, but still have a support team. You can still have people that explain what it's doing. But I think your point's well made. I think there's this expectation that this thing will kind of exist in and of itself, and kind of there's no sort of every person for themselves in that regard. And I think there's plenty of examples out there of really terrible user experiences or problems that people have had dealing with this new industry. But that's that certainly changes, and I think we see it in our community that even without our input, the community is sort of very sort of self-sufficient in respect of helping each other troubleshoot through any kind of aspect of using the product, iterating, giving feedback. We kind of it becomes this really wonderful and short kind of feedback cycle for us. You kind of get this extremely direct feedback, and so I would say even compared to say a centralized product, when you kind of engender the community and empower them to be able to have the tools to solve things and to have a really direct feedback loop, you can make and kind of evolve the product really very quickly and in a way that is extremely user friendly. So I think there's that would be our view on the other aspect of it. And I think companies that do that and do that well, listen to customers, will continue to succeed. Absolutely. Irrespective.
And so I'm sorry, I cut you off before you were about to talk about the sort of the more enterprise user, institutional user, and that sort of experience.
Yeah. So I think the other piece of the puzzle just on that is those users still have they have internal requirements that they need to see satisfied with anywhere that they're deploying capital, right? And so it could be ensuring that it's one thing we face. We had a lot of great institutional investors that are using our platform at the moment, and one of the critical things that they needed to see was they need to see that the thing had been audited, that the contracts were validated, that there was some clear third party third parties have been engaging with it, auditing it, verifying that the thing actually does what it's intended to do. So you see requirements like that. I know for future products that we intend to bring out, that we're getting feedback that they would be interested to have third-party custodial solutions implemented as well. And so there's you have a clearer set of risk parameters that you need to satisfy for these other users. And so the onus is on us to continue to prioritize that and build for that. We're fortunate we had Coinbase's auditor, the security auditor, audited our smart contracts. And you sort of see that you can start to differentiate. Game projects have to sort of start differentiating in that way when they start speaking to the different customer base, the more institutional focus group.
Yeah, absolutely. And I guess you always think when it comes to anything crypto, blockchain, in the institutional space, there's always that fear. You're just working on such a scale that if something goes wrong and someone hits an extra zero and sends something across that they weren't supposed to, or you hear the horrible stories, where someone loses a password or someone dies, or something happens, and when you're talking about institutional grade money, this is millions, if not billions of dollars in the offing. I mean, I think it fascinates me to see the institutional space try and get on board with so much of crypto, blockchain, and DeFi, and sort of really want to be involved because they can see the potential of it, but also be so wary of the risk of a system that isn't reversible, that screw ups can't just be turned around and fixed, and that you can end up having situations where money is just gone from a system, which I think institutions usually have so much insurance and backup and whatever, that's just simply not the case in their legacy financial working experience.
Yeah, and that's that approach is changing. That's been one of the big drivers of growth in the last 3 years in the industry, right? Is building products that cater to those needs, and building better products, right? Having safer products, having more secure, less unpredictable. Product offerings is sort of been a feature of the market, and a lot of great companies have built to service exactly that. So custody solutions being implemented by banks, for example, was a critical kind of piece of the puzzle to allow more institutions to feel confident to actually do so, or to even be able to do it from a regulatory standpoint. You can't. Some institutions or investors are restricted from doing things until there is custody and the like. And so we see that the products continue to be built to target or to cater to that. From our point of view as operators in our space, we look to implement whichever third-party products we can to augment the offerings that we have. Which I think that's sort of the important piece of the puzzle for growth. I think also, having had the benefit now of we've got sort of 16 or so great venture capital funds that have partnered with us and are interacting with us in terms of deploying capital or their assets into our contracts and things like that. Having the benefit of feedback from them, we know that their kind of investors are pushing them to have more exposure into this market. That's just there's momentum in the investment markets to deploy capital into this space because it's a new emerging asset class with interesting and higher rewards or returns. And it's also a critical piece for some investors to just have a diversified portfolio. And so we're starting to see an increasing number of folks that are happy to to participate some small amount of their portfolios in it. And I think the stat that we saw recently, that we've talked to the market about a lot, is that I think there was a survey done that was over 50% of fund managers in question said that at least 7% of their portfolio would be deployed into crypto sort of over the next 5 years, which is I think the sort of 3 to 350 billion in funds under management in question looking to participate in the space. So we know that products will continue to be built. We'll continue to build our products to cater to that market, and there's a lot of third parties that are making that more safe and secure for folks to participate in, and we, like others, are implementing it.
Yeah, I'm just going to be so interested to see. I mean, who knows what we took 5 years in the crypto space. Who knows what that's going to look like? But I'm so fascinated to see if all this hype, this excitement, this motivation to act from the institutional space remains if there is a sustained period of sort of inactivity or sort of a pullback in the market that's significant and sustained. It's such a behemoth, the institutional space, to sort of get that ship pointed in the crypto direction. And it seems to have largely happened over the course of the last year, as you're saying, and I completely agree from my experience in talking to folks all around the market, that it does seem to be happening. But is it sustained? Is it maintained? Does the ship risk pulling back in the other direction? It'll be fascinating to see that play out. I mean, looking forward, 5 years is a long time to project, as I said, but looking forward, I mean, what is your sort of outlook? Do you think this will all come to fruition? Do you think energies are a bit high still at the moment? Expectations are a little over leveraged. How do you sort of look out those next couple of years?
Yeah, I mean, from a building point of view, I mean, we intend to be around. We see that there's critical pieces of infrastructure to still build out on Algorand, right? There's no decentralized exchange product yet in Algorand, so we're headlong to build that, and that'll sort of be a 12-month process at least from here, and with any luck, in 5 years' time, it will be a thriving ecosystem of companies and projects and DeFi and traditional finance projects that are utilizing and issuing tokens and utilizing an exchange, for example. I think if we look at our sort of venture capital funds that are backing us, those guys are on 7 to 10 year mandates with new DeFi funds that they've launched. So these guys are going to be there deploying capital into this space. They're mandated to be deploying capital into the space for the next decade. And we don't see in the near term any sort of likelihood of the amount of investor capital being pointed at DeFi or being pointed at the distributed ledger industry more broadly, to go down. What will fluctuate, and we're sort of seeing that fluctuate now, is how much in any given day is being traded, and what is the if those volumes go down for a while. But it seems very unlikely from our point of view that this sort of market condition is anything but a kind of mild or moderate correction. Right. In a general trend of further adoption and further integration. I think the other piece of the puzzle which we're seeing play out, at the government level, is the central bank digital dollars that have been created. Mm-hmm. We sort of saw this acceleration in that conversation in the US just over their summer, these last sort of 2 months, where they've essentially pulled together, the Feds had pulled together working groups to actually put out really clear guidance on what that what a central bank, a US digital dollar is going to look like from from a regulated point of view, or a central bank point of view. And so that is another piece that just that's going to play out, that the inescapable trend towards the digitization of key parts of the financial services industries and the financial services markets isn't going to stop. And that, irrespective of that trend, irrespective of the kind of volatility, day-to-day volatility in the crypto markets, will continue to drive adoption of this technology. So from us as technologists and builders in the space, the market is only getting bigger. The opportunity for more participants in it is only getting bigger. If things are a little bit more regulated, or things are a little bit, things are more, if there are clear and defined boundaries of what is and isn't acceptable, that's perfectly, we're perfectly happy with that happening. It'll kind of hopefully clear out some of the worst actors in the space, and continue to create more space for folks like us who are building quality products.
Yeah, absolutely. And I couldn't agree with you more about regulation. I think there needs to be some clarity on regulation in the space, and make sure that everyone's protected where they need to be. I just hope it comes down in a clear and informed manner, and we're getting the best people out there lobbying to make sure we get the best regulations put in place. But anyway, Sebastian, it's been an absolute pleasure talking to you about this. So many fascinating touch points in this industry where we stand right now. I really think this is a valuable conversation to be having at a time where it's not just market hype after hype and new projects flourishing every minute. This is the time when projects really lay the groundwork and prove that they're sustainable for the future. And I think it's a fascinating time to see that. But I always like to give our guests the last word. So anything else you'd like to say to our audience? Anything they should be checking out, or ways to get involved with Yeardley if they like what they've seen?
Yeah, I mean, we'd be delighted if anyone is interested to jump on our website and just play around with the app. You can follow us on Twitter. You can follow us on, get into the community in Telegram, and sort of, have a look and feel of what DeFi and Algorand is. And I think if our users are telling us anything, is that they're enjoying the product, and we would love more users out there. So. Appreciate the time, appreciate the conversation, and the chance to, speak to another Aussie in the space, and just look forward to. Pardon me? Yeah, there certainly are, and look forward to the next time that we meet.
Absolutely, and to everyone watching, just make sure you stick with REIMAGINE. So much more killer content. All the best in the crypto space coming at you. Thanks for watching.